great to be here, and we already got a bit of an introduction, but I'll do it once again and give some more context also to the company. So maybe starting with myself, which might be rude, but so I'm Laura. I'm a principal at Early Bird VC, based here in London. We're a pan-European early stage fund that invests from pre-seed to Series A all over Europe. And we're very lucky to have been backing both Upvest and Finmid, and so I guess we're the common denominator here on stage today. So starting maybe with introducing the first panelist, Simi Swill, who is the UK General Manager at Upvest. And for those of you who don't know Upvest, which I hope you do, it's the European's leading investment infrastructure platform, and they provide kind of investment experience through investment API and take care of everything from settlement, custody to execution. And they are kind of serving leading fintechs like N26, Revolut, Raisin, Bunk, etc., but also digital banks like Santander and brokerage firms. And Simi has actually spent the last 2 decades scaling fintechs and banks across Europe. So we're very happy to have her here. And then we have Max Schertel, who is the co-founder of Finmid. And Finmid, for those of you who don't know that one, it's Europe's leading embedded lending platform that offer kind of all-encompassing financing solutions for platform businesses such as Vault, Just Eat Takeaway, Deliveroo, Free Now, etc. And before co-founding Finmid, Max led business operations at N26. So also a very solid background from scaling fintechs here in Europe. So maybe to kick it off, you see here the topic of the panel, and as many of you might know, Europe is often cited as a very challenging place to scale a fintech from. But Simi, you've actually been doing this for the last 10 years for various fintechs. So do you agree with this reputation that Europe has as being a very challenging place to scale in, or don't you, and kind of why?
I'm going to start with the positives. I think there's a lot of reasons why it's great to build in Europe and the UK. So as Laura said, we sell investment infrastructure APIs, so our clients are fintechs, banks and brokers. We benefit from a really vibrant fintech sector in the UK and Europe, so those are our clients. So lots of investment, lots of support from regulators mean that we have a really vibrant set of clients to sell to. We benefit from harmonization across banking, payments, AML. So we work with N26 to scale across Europe, 18 different countries in 3 months because of that harmonization. But it is also challenging. And so, what we've now done after scaling N26 is, in order to be able to compete with the local competitors in each market, you actually have to then build the local tax wrappers, the local tax administration, deal with the local reporting, and each market has got something separate. So if you compare that with the US, where in theory you have a single market, to reach the same scale, the same number of millions of customers, it obviously requires a lot more complexity and a lot more investment in compliance. I kind of like challenge. I think it means it's defensible. I also think it means that you build a muscle that makes it easier to then do harder things sooner. So I'm probably in the camp of, yes, it's hard, but that's sort of what makes it great to build here, as opposed to, there's going to be other challenges if you're in the US, huge numbers of competitors and scale and capital that's required. So I think there are benefits and challenges to each market.
Yeah. And I mean, one thing that is often mentioned when it comes to like challenges with Europe is the kind of this market fragmentation, which you also mentioned, and the idea of Europe as a single market has been a political topic for quite some time now. So I'm wondering, Max, has this idea of Europe as a single market become sort of a myth at this point, or are we finally starting to see changes here, specifically from a fintech perspective or finance perspective?
Yeah, I would say it's changing, right? You mentioned banks, right? You mentioned N26 as an example of a bank that's pretty multinational, but if you really look at Europe, there's not a single bank that serves every single country, right? Even the very large ones, even in, I don't know, a Deutsche or an HSBC or a Santander, they have a few markets where they're really big, but they're far from everywhere. And so I would say, like, if you just look at the status quo with the incumbents, they just haven't been able to build it. I think mostly because regulation 20, 30, 40 years back was just differently. It was very, very fragmented. And as you say, the regulator, I would say, is making a lot of effort to push into that direction, but it's not there. At the same time, what we see, and I think our customer segment is probably a little bit different than yours. Our customers are very large software platforms. They're usually not regulated, at least nowhere near how fintech is regulated. And so they're just active wherever they think there's a great market opportunity. And so the challenge that it created for us was that ultimately, when they want to work with us, they want to work with us wherever they are. And if that is Romania or Spain, then they don't care, right? And they don't understand why is financial services different. So we had to put a lot of effort into building it really EU-wide from the get-go. It is possible. It requires a lot of pushing. And as you said, like, there's a lot of very nitty-gritty details there, whether that's taxation or AML or how do you onboard customers that you then need to take into consideration. I think we're moving to a point where that's getting better, and I think everybody in the industry understands why the status quo is maybe imperfect, but I would say over the 10 years that I've spent now building from a bank to now, infrastructure in Europe, it's definitely gotten better at least, but not fully there yet.
No, and the question is if it ever will be, but it's interesting what you're saying, that essentially these cross-border fintech players, specifically on the infrastructure level, can actually play an important role in kind of reducing this or bridging this gap between markets. So do you agree with this also, Simi, that fintechs can kind of act as bridging this gap and making it easier for companies across Europe to scale?
Well, that's part of our pitch, so I guess I have to say I agree with it. I mean, what I love about fintech, and I'm a fintech nerd, so I'm allowed to say that, is, fintech is hard, and part of what's hard is it's about actually understanding the rules from first principles as opposed to just taking it from this is what we've done at HSBC for the last 20 years. And once you've spent that time understanding the rules from first principles and thinking about how can I use tech to do them in a different way, you can fundamentally challenge and transform an industry. So I think, both of our businesses, we've said, how do we do this differently? How do we make it as easy as possible for our clients to achieve their outcomes and then scale across markets? So I think fintech, whether it's in investments, whether it's in banking, payments, lending, by thinking about how do you do it differently, are able to enable even incumbents to change their business models and to sort of scale more easily.
Yeah. There's definitely a very powerful piece of both of your pitches, I have to say.
But maybe to add to that, yeah. Right? I think what's very interesting for us is working with people that don't come from financial services. Yeah. Because that ignorance towards why should it be complex, right? Why should it not work everywhere? I think that's really, really helpful. And also a good push always to reflect on, like, what you do as a company, but also you just have to take for granted that it's complicated. You just have to take for granted that, people say you can't do it, nobody's doing it. That doesn't really mean you can't do it. You just have to push it a little bit harder then. And as you say, question a lot from first principles on how to really run these things.
Yeah. And I mean, now we talked a lot about the challenges, but Simi, you also opened up by saying you like to start looking at things from the positive side. And when talking about like the market fragmentation in Europe, it's often seen as a problem that needs to be solved. But I think we all know that every threat also comes with opportunities. So I'm curious if the two of you also see, like what opportunities you see that exist here in Europe, thanks to the fact that it exists of 40 plus independent countries. Can you leverage that in a positive way and, you know, create, I don't know, moats or defensibilities around the business as you scale?
Sure. Absolutely. I mean, that's also part of our pitch, which is we compete with American providers that come to Europe and all they offer is US stocks, and they don't have any form of what we call localization. We offer European stocks, UK stocks, US stocks. We realize that every market has a different preference. So in Spain, there are tax benefits for funds. In Italy, they prefer bonds. We've built pensions and tax wrappers, all of which are required at a local market level. So our core strength and the defensibility of our business is that we've actually invested heavily in building these local market capabilities. That makes it quite hard for providers that aren't willing to make that investment to compete against us, and that would be one of our moats. I think another advantage is that actually just the size of the market and the opportunity here. So we sell essentially the opportunity for retail investors to start investing. In the US, that's 50 to 60% of people already own stocks. In the UK and Europe, it ranges from 12% to about 30% in sort of Germany, where it's most advanced. So if you think about the social economic imperative for people to start taking control of their financial futures, there is a huge amount of investment from governments and regulators to encourage people to start investing, invest in pensions, build your own tax wrappers. So even that growth opportunity here, because it hasn't historically been driven here, is massively exciting, even without the pure fragmentation at local level. So I have lots of things I can be excited about, but I'm conscious of time, and Max is also excited about lots of things. So.
Yeah,
no, like, I mean, I think if I think about Europe and like come a little bit maybe more from the demand side, right? So what we do is we provide then credit to the businesses that run on these platforms. The demand side is very, very unified. There's almost no fragmentation, right? If I ask a restaurant in Greece or in Sweden or in Spain, they all need money, and they all need the same kind of money. They either need it for growth, they need it for a tough time, or for working capital. And then whether I'm a restaurant or fleet operator on a platform or operate rental units, it doesn't really matter. So my point is more, if I look at what do businesses need, they need the same thing across almost all countries. And then the question is more, can I actually build the same product in all of these countries? Can I build something that looks the same in all of these countries? So the effort, I would say more from the infrastructure side, isn't too high to localize these things. Right? But I think the great thing about Europe, and that's easy to forget when you're just focused on your own country, where you're coming from, or the few, is it's a huge, huge market. It's, I think, almost a third more people than the US. And these people are very similar, save for all of the languages and whatnot, but in what they need, at least when it comes to access to credit and capital, it's very, very similar. And I think that then is helpful, because you're forced to, or it actually makes it easy to think about what's the outcome that I'm building for. Yes, maybe a little bit complicated to achieve that in the back end, but how can I hide that? And I think that's a very big advantage, actually.
And I mean, I remember, this is now already several years ago, but when Klarna came out as an early winner in the kind of buy now, pay later market, everyone was amazed, because they come from Sweden, which is a tiny country. I also come from Sweden, by the way, but I know that they often cited that the reason they kind of won the market was that the fact that they did come from Sweden, and they had to think global from day one, because Sweden is a too small market to kind of become a significant player in. And I mean, if I put that in perspective from FinMid and Upvest, you both kind of come from Germany, which is, of course, one of the largest economies in Europe. Do you think it's still important to be, let's say, global or pan-European from day one, even if you come from one of the largest, economies in Europe, like UK or Germany? Or does this statement mostly apply to smaller countries like Sweden? Or others. What's any thoughts there?
Yeah, I mean, I think the question is who do you serve, right? And again, like when you build infrastructure, like in our case, you build it for multinationals, you have to be multinational. I think the German market, again, like you look at credit demand, is huge, I agree, right? There's no question about that. But again, like you want to serve multinational players, you need to build multinationals. For us, it was very clear we need to be multinational for day one. And while the company is German, we actually did not start the product in Germany. Funny enough, actually in the Nordics, not Sweden, but Finland. And then build it out across Europe from there. Most of the business today is actually in the Nordics, in Southern Europe and in Eastern Europe, funny enough, right? So not as you would think in Germany. So for me, I would say, yes, it is easy to build only for one market if the market's big enough. But for me personally, and I've lived in many different countries, it's always more exciting to do something for everyone in Europe. That's still a bigger opportunity, and as a startup, obviously a bigger opportunity is better. It's more revenue potential, and you like that naturally.
Yeah. Anything to add, or no?
I mean, I would agree. I think that is one of the other advantages of building in Europe, and one of the reasons why I think so many of the largest fintechs in the world are from Europe, whether that's Revolut or Adyen or Trade Republic. You can't just sit on your laurels. You do have to think about complexity from day one and think, how does you go international from day one? And once you've built that capability and you've got that mindset, I think it does make it easier to grow internationally. Whereas if you start in a very large market to begin with, you might not have built that skill set or that thought mindset from the beginning. So,
yeah,
absolutely.
Yeah. And I'm sure there's also some entrepreneurs in the audience here, and I mean, both of you surely knows that it takes more than a day or a year to build category-leading fintech in Europe, and you've both been doing this for decades and decades. And I was curious, what are some key lessons learned and advice that you would give to fintech founders that are starting a business today?
Yeah, I mean, again, in fintech, everything's regulated. Actually, reading regulation, I think is it sounds so simple, right? And it's so easy to delegate that to a lawyer and say, hey, can you tell me what I need to do? But actually, reading what's written down and why is it that way is something that does help you a lot when it comes to staying compliant and getting licenses, but also keeping licenses, which is often harder than actually getting them, right? So I think that's the one thing, and then the second thing is perseverance. You just really need to be willing to go through some pain, as much as we want to give it a positive spin, yeah, but I think that's also the reality of it, and just live through that and push through it. So I think those are the two, and again, reading regulation might sound a little bit stupid or obvious, but I think it's easily overlooked.
Yeah.
So I would say there's three things. One, as Max said, compliance and your license is a competitive advantage, and it is a privilege to have it. So respecting that from an early point and understanding the power of having that license and making sure you invest in that team and invest in understanding the requirements early on stands you in good stead. I think the second one is team. I think in most other sectors, having a team of pure generalists can probably serve you very well. Given the complexity of the market, having enough people that genuinely understand the regulations and genuinely understand the market, combined with people that maybe don't know so much, they can give the right level of challenge, I think is a good team structure that might be quite different from sort of non-fintech-y fintech sectors. And then I think from a go-to-market perspective, given the challenges of you're regulated, you probably need to be more thoughtful about who you can sell to. From a go-to-market perspective, it's quite helpful to leverage partnerships early on so you can sort of understand your ICP and narrow in on it quite early. So, that's been really powerful for us in terms of having good partners that can refer us to good clients.
Yeah. I see we have time for one final bonus question. So I thought let's just bring up the topic of AI, which we haven't touched upon so far in this panel. But I'm curious, if Finmid or Upwiz were founded today, do you think you would be able to scale quicker just because of kind of all tools available today? Or would you say the fact that, it takes time to scale a fintech because of all the regulations, et cetera, you need to counter, it would, the journey would have looked largely the same?
I think maybe you can run the team a little bit more efficiently. Yeah, when you apply for a license, it's a lot of paperwork, and I don't want to spoil anything, but it does help with that kind of stuff, right?
Yeah.
But then again, when you sell into enterprise, which ultimately once you have a bit of a product and you want to sell into large companies, then sure, like it can help with the operational process behind sales, but I think there's no simple way of saying, oh, I'm deploying AI in my sales process and suddenly I easily get all of the big clients, right? So I think, yes, you can maybe run it a little bit slimmer, the team, but are you going to be massively faster? I don't think so, because the critical things are, at least today, I think, still hard to outsource completely to AI, in particular on sales and getting to big companies.
I would agree with that. We're deploying AI heavily in our business in terms of, I guess, making people more efficient. But I don't see anything we would have been able to massively leapfrog, because it takes time to get the licenses. Our infrastructure is genuinely complicated, so it is building connections into legacy exchanges. They're not using AI, and the people we're selling to need human contact and sort of a lot of FaceTime. So again, it's not something you can send a bunch of AI SDRs at. So I think there's scope for efficiency, as Max said, but I don't think we would have been able to do anything radically different in terms of our journey.
Very interesting. Well, I think we're at time. Thank you so much. And thank you, everyone, for listening. I think that concludes the panel, right?
Great, thanks.